Now I'll discuss the first section of CTP and start with the primary duty of the treasurer. A treasurer is a really important person in a company, and he has to manage the cash flows and plus other functions like overall financial risk and foreign exchange risk. This is really important. At any point of time, your liquidity in any company should not go down below a certain level, and you should have a proper budgeting and internal controls for that. Treasurer is also required to do external financing. It can be a short-term finance, it can be a long-term finance, it can be from a money market, it can be from the private lenders, from the angel investors. This depends upon the scenario of the company. A treasurer is dealing with the banks and financial institutions, creating a relationship. There are certain compliance roles he has. Day-to-day liquidity and cash management is really important. Maybe it's on the branch level, it's on a business unit level, it can be on certain levels that he has to manage the daily inflows and outflows. What is the optimal cash he has to keep on? This is all we will discuss in this course. Short-term and long-term investments are really important. Short-term investments, we have deposits, we have payables. Same way we have long-term deposit, long-term receivables. How to balance them, how to keep a proper match between both instruments. This is a job of the treasurer. Treasurer is creating treasury policies and procedures. These policies should have an ample insight about management, effectiveness, efficiency. It should bring economy. It should be smart, optimal, and relevant. These kind of policies and procedures should optimize the treasury functionalities. And of course, treasurer is responsible to manage the payments. It can be an internal payment, it can be a local payment, and it can be an international payment. We have always the corporate governance in the listed companies. Corporate governance is a very important requirement, and we have to run a corporation in a very effective way, in a transparent way, and in an effective and adequate fashion. We have SOX, Sarbanes-Oxley, which gives us a lot of compliances about the corporate governance, that how to create internal control, how to separate the ownership management, how to make committees for budget, for treasury, for other affairs in order to optimize the efficiencies of the governance. The management of the company, managers to make sure they are enacting the best interest of the company, and they are sincere and loyal to the shareholders. So we tell them, be loyal, be faithful, don't put your interest in front of your work, your company, your shareholders' interest is the first that you have to maintain. And you should use business judgment rules and a lot of other compliances that will enhance the corporate governance and will add value in the shareholders' wealth. Agency problems is issue. The management of the company may not act in their own best interest instead of acting in the best interest of the shareholders. So this is a day-to-day dilemma. There are some financial scandals we saw in the 90s and early 2000 because directors, they give them their own salaries, and they did certain investments which was not in the interest of the company, and ultimately shareholders were the sufferers. So corporate governance make it very strong now, and you have to do a lot of compliances. SOX compliances are really important. The concern is management of a company is more interested in its own self-interest than the interest of the company, of the shareholders, as I told you. And the goal of the company is to increase the net worth of the shareholders. So all our decisions, policies, investment policies, inflows, outflows, procurement, supply chain, hiring, firing, structure, structuring and organizational competencies. These are really important points that should be always helping organizations to grow. We should pinpoint those elements which are not in the favor of the company, and the director was really important in that. Guidelines for the independent directors. When we have directors, generally we make an audit committee, and this audit committee should have internal auditor, external auditor, and the financial experts. These are industry specialists. They cannot be your shareholders. They cannot take any money from you as a salary. They will add value by their own professional experience and opinions. We should have a certain code of ethics for the directors. So independent director must make up a majority of the board. They must not have worked with the company as an auditor in the last 5 years, cannot be an owner or the officer of the company. So this will create a transparency in terms of your corporate governance. Investor relations is very important because investor is the most important person in a company's life. You have certain kind of investors. There are high risk investors, there are medium risk investors, there are low risk investors. So investor management is really important, and they are responsible for the release of information to stock and bond holder of the company. This is not limited to financial information, but could be any time of this information is relevant to the company current and future shareholders. So investor relationships are really important to handle. According to the essential of treasury management, how treasury management is defined, first you should have a definition of your treasury management. It covers the safeguarding and efficient use of the financial assets you have for the benefit of the company and for its various stakeholders. So financial assets, acquiring, recording, presentation in a true and fair way, then optimization of these assets is the main principle behind the treasury management. Primary goal is the essential complaints that the primary goal of the treasury management is to manage the cash and cash equivalent and their related financial assets of an organization as efficiently as possible. Like the concept of 3 is really important, like 3: economy, efficiency, effectiveness. This is really important to bring into. Working capital management is the first goal is, of course, maintain a certain level of cash in your company always in order to avoid the defaults. Maintain liquidity, optimize your cash resources, maintain access to the short-term financing, and manage your investment. These are really important goals of the working capital management in order to manage your day-to-day expenses, liabilities that we have to pay. There are some tasks which we have to do in treasury: prepare cash positions, worksheets. What are those worksheets? How they look? What is the format? This later we'll discuss. Monitor cash balances, deposits, cash receipts, cash deposits, check deposit, credit card transactions. Concentrate and disburse cash when it is required. Invest and borrow short term as we need from different sources. It can be interbank borrowing, it can be from other sources, it can be a T-bill selling, it can be a promissory note, it can be any instrument. Reconcile and research bank charges and transaction errors. Generally in our day-to-day life, when we have transactions, we might have some issues in the accuracy, reliability that we have to reconcile. Work as needed with other areas, like we have to work with accounts receivable, payables, and accounting portion for disclosure, for US GAAP compliances. These are really important functions. Assistant treasurer, who is responsible for day-to-day treasury functions. Cash manager responsible for the daily cash remittance, current accounts, and potentially the bank relationships. Controllers, what they do is generally technically responsible for financial reporting task, but also be responsible for a lot of other tasks: account receivable, financial planning.